We're going to start in just a few minutes. We're just leaving some time here for people to come into the room while we set up the live stream link to YouTube. Good morning, everybody. We're just waiting to get the live stream to YouTube sorted out. We'll be starting in just a few moments. My team's telling me it'll be about 10 seconds until we can start formally, so we'll do a countdown. Almost there. All right. Welcome to the second day of the London Conference 2020. I'm Kate Spiliopoulos, Head of Events. As a reminder, if you'd like to tweet about today's session or follow the discussion online, please use the hashtag LUNCONF20. That's LONCONF20. If you're in the Zoom webinar this morning, you can submit questions for the panelists using the Q&A button on the bottom of your screen. So if you hover your mouse over your screen, you'll see there's a Q&A function at the bottom right. And our chair today will be monitoring that during the Q&A section. We'll be kicking off in just a minute here. But we wanted to talk about this morning the big life-changing crisis that's impacting people all over the globe. No, the other one. That is climate change. We just feel like it's been such an insane year, and everybody realizes this is such an important problem, but there's very little room for it on the stage these days. So we want to talk about how climate change is going to be interacting with plans to boost the economic recovery from COVID-19. And our chair for this session is Dr. Ashok Sinha. He's CEO of the London Cycling Campaign and chair of the London Sustainable Development Commission. So Ashok, welcome to the London Conference stage. Ashok, I think you're muted.
Yeah, I thought you would unmute me automatically. Sorry about that. Schoolboy error. Kate, thank you so much for inviting me to participate in this morning's session, which I'm really, really looking forward to, especially hearing from our esteemed panel. Yes, as Kate said, my name is Ashok Sinha. I'm the CEO of the London Cycling Campaign and chair of the London Sustainable Development Commission. My job this morning is pretty easy. I'm just going to try and choreograph the conversation so that you can get as much as you can out of our esteemed panelists, who are, in order on my screen, Catherine McGuinness. Catherine is chair of the Policy and Resources Committee at City of London Corporation. You'll see from the paperwork that she has an extensive career in financial services law and has worked in financial services generally. And the City of London has held a number of portfolios, not just in relation to financial services, but also in relation to education and the arts. Welcome, Catherine. Jamie Heywood is also on the panel. He's Regional and General Manager, North and Eastern Europe for Uber, with extensive experience in several continents, with a variety of corporates, including Amazon, Virgin, and Orange. So welcome to you also, Jamie. And Dimitri Zenghelis, who is a fellow commissioner. Hi, Dimitri, nice to see you again. Who is a special advisor for the Wealth Economy Project at the Bennett Institute at the University of Cambridge. And Dimitri, as I'm sure you all know, has enormous experience inside and outside of academia, including in government, playing a leading role in production of the Stern Report, which many of us will still remember and still refer to. A very rich report that was full of foresight and insights that are still relevant today. So welcome, Dimitri. Now, before I go on with a few words of introduction, I think we can get our poll up. There's a poll which Centre for London is running this morning for this session. Can we get it up? Right, here we go. Do you think the coronavirus crisis will ultimately be a step forward or a setback in terms of London achieving its climate goals? So if you could start voting in that poll, and we'll come back to the answer in just a second. Now, this session is part of Centre for London's 2020 annual conference, and I can't think of a more important question to answer than how London and we as Londoners can play our part in the global effort to avert the climate and ecological emergencies which threaten the very existence of civilization as we know and understand it. So it's a big picture question we're talking about here today. There's a sub-question in all of that, which is if and how the economic recovery that we need to create, that we need to institute to help repair the damage that has been wrought by dealing with the pandemic, if and how that can be used to take London inexorably and rapidly towards a radical reconfiguration of our economy so that it is zero carbon, it is zero waste, and doing so, we can create a fairer, and in doing so, we can create a fairer and more equitable and more socially just and more prosperous and happier city along the way. So let's go to the result of that poll. What do people think? Can we get that up on the screen? A step forward, overwhelmingly. Some people think, it's about 13% think it will hold us back and 15% think that it won't have any particular bearing. Okay, can we take that off the screen now and ask the same question to our panelists? And I'm going to start with Catherine, because Catherine, I know you have to go shortly before 11, so I'm going to start a lot of questions with you, if that's okay, while we still have you. Catherine, what was your answer to that question?
Yeah, well, thank you very much. First of all, apologies that I do have to head off. That was a very positive result, I think, from your poll, and it's certainly the result I would like to see. We hear the mantra build back better all the time as we look at the recovery from this pandemic. And I hope that this absolutely will be a catalyst, will be an opportunity for us to build on the changes that we've seen in the way people work. The way that, although I am expecting people to come back to the centre in numbers, I'm also expecting people to carry on using the new technologies that we've discovered or developed in order to work in a more hybrid manner, to spend more time working from home. I think that will be one opportunity. I think what we've done around transport and ensuring that we have more space in the streets, which maybe we've done partly because we need space for social distance, but certainly in the city, we had an ambitious transport strategy already aimed at prioritising pedestrians and cyclists and active travel. We've accelerated that as a result of the pandemic. I think those are two examples of initiatives which we can build on to ensure that as we look to come back from this pandemic, we can address this huge climate challenge as well. I have to say, though, I don't think it's completely a given. Everybody is saying we must build back better, we must look, and as we look to economic recovery, and I would completely endorse this, we must look at those growth areas in our economy, such as developing green technology, such as green finance, which is a big specialism here in the city. But when I look at what people are actually doing in their daily lives, although everybody's saying we must take advantage of this to address the climate challenge, I still see people wanting to use their cars. I still see, I also worry about the amount of money that we're going to need to address the climate challenge and whether the economic cost of this pandemic is going to get in the way. So very keen to see what we can do to build back better, to ensure that we address the climate challenge at the same time. Worried about some of the challenges we'll face as we do that.
I think that's very wise to add another caution there, Catherine. One of the things that really concerns me is that with the level of economic disruption and possible unemployment and business closures, there'll be a mass rush for unsustainable consumption. And you pointed out that what's happening with motor vehicles, they've gone back to higher levels of traffic in some parts of outer London, which is a segue to you, Jamie. What do you think? What was your answer to this question?
So I shared the collective group's optimism. So I felt actually, as we've all hunkered down in the first lockdown, and as we're due to hunker down in the second lockdown, many people have sort of gone back to first principles about what's important to them and what's important to their family. And I think the clean air and the bright skies of the first lockdown did cause people to think that, actually climate change is just one of those fundamentals we need to get right. And if we don't get right, then, we will all suffer the consequences for generations. I do also share Catherine's sort of concern that actually, the transition will be significant and the transition will be costly. And so whilst we're optimistic, I think we need to be sort of open-eyed and pragmatic about how we fund that difference and make sure that it falls fairly on everyone's shoulders and not disproportionately on the shoulders of just those who are poorer in society.
That's a really good point about finance. And actually the LSDC has done a lot of work on this, and we'll maybe come back to that later on in the conversation. Dimitri, what's the economist's view, your view as an economist on this question?
Well, thanks for asking, Ashok. And my answer is probably going to be very typical of an economist. So I have sleepless nights and sort of dyspeptic ruminations about the fact that, all this kind of positive change might come to nothing as memories are short and everybody goes back to the bad old ways as the world gets over the pandemic, and some of the benefits of some of the behavior changes and technological changes we see prove to be transitory. On the other hand, some would argue that we've seen 6 months of innovation, 6 years of innovation in behaviors and technologies in as little as 6 weeks as a result of some of the changes we've seen here, the use of connected technologies, meetings such as this one, better use of urban space, reclaiming streets, increased localization, more efficient use of supply lines, and so on. And my economist answer is I both worry about it and I'm optimistic. I actually voted that it will be a step forward in this. Now, at first that might seem, typical of an economist, on the one hand, on the other hand, and, however many hands economists are purported to have. But actually, I think I probably share that sort of schizophrenia with a lot of the audience. And I think Paul Romer, who is a Nobel Prize winning economist from last year, I think encapsulated it very well. When he's asked to comment on climate change and whether he's optimistic, he says the following. He says he's conditionally optimistic. What does that mean? Well, he contrasts conditional optimism with complacent optimism. Complacent optimism is the optimism you have when you just sit and expect the new technologies and the new behaviors and the new institutions to just sort of drop out from the sky as manna from heaven, and you don't have to do anything and the climate problem is solved. Conditional optimism is one that says, look, we can see the technologies and the behaviors and institutions we need to bring this about. We can see some of the opportunities from this. I mean, hands up who don't want cleaner, quieter, safer, more innovative, more productive, more efficient cities. But we have to build it ourselves. The optimism is conditional on us taking action now, setting up the policy frameworks, investing in the innovation, investing in the infrastructure, the skills, the technologies, and so on, to bring about that world. And if we do that, then we can do this quite easily. And that almost sort of, belies the tragedy of this. It is within our grasp. We can do it. We can do it with great opportunities. But if we miss that opportunity and we go back to the bad old ways, we repeat our recovery plans, the mistakes that we undertook following the great financial crash of 2008, then the cost will be very high, not only in terms of the climate impact, the lack of inclusivity and sustainability of our cities, the lack of livability, but also the opportunity that was so close within our grasp that we actually managed to miss.
Okay. So can I take that, something you touched on some specifics about what a green recovery might look like, Dimitri, and so did you, Catherine and Jamie. Can I ask you to paint a bit more of a specific picture of what would be a good and green recovery? So it could be in relation to transport, it could be in relation to housing, business, jobs, skills, education, green spaces. What would a good recovery be? And I don't mean what's the end point in 2050, or some of us believe, we need to decarbonize and circularize even sooner than that. But let's just say over the next 5 years, if you're explaining to the 8 or 9 million Londoners that live in our great city, what would it look like? How would their life be different? Catherine, would you like to go first?
Yes, thanks very much. First of all, Dimitri, I think is absolutely right. We shouldn't underestimate the economic challenge here, and it's absolutely essential that as we look at recovery, we ensure that green and growth go hand in hand, because this climate challenge is so enormous. I'm going to pick 3 elements. I'm going to pick buildings, transport, and then skills. There's a lot more that we could talk about. Buildings, I think we're going to need a real focus on our buildings, at retrofitting existing buildings to make sure that they are more climate resilient, so that we are moving towards net zero, also so that we're moving towards net zero targets. So buildings in the first place, and I'll come back to that. That's a major issue in itself, because I'm told that 70% of London's housing stock, for example, needs retrofitting. So that's a pretty big challenge. A transport, where I do think we need to be looking at more active methods, and we really need to be ensuring that our infrastructure is set up for that, and indeed that we're encouraging people to use more efficient, where they are driving or whatever, use more efficient machines. And I think thirdly, we need the skills that will support all of this. I've just come actually from a session with some of the inner London leaders, talking about the skills that we need to develop for the future, whether as we're looking at construction skills, we need to develop some new skills in order to meet the green challenge. As we're looking at banking skills, do we need to look at new skills in the green space? So I think there's a whole raft of things that we need to do. For ourselves in the City of London, we're very focused on this. We've just adopted a climate action strategy which will see us net zero in our own activities by 2027, but across our whole value chain by 2040. And we're really committed to working with partners, and those partners include the businesses within the city, to ensure that the square mile itself is addressing some of these challenges, is looking at how buildings are operated, how buildings are built, to make sure that they are more climate efficient, they're more resilient. And we're also working with the Green Finance Institute to look at methods of meeting some of these huge finance challenges that we'll face in the retrofitting, and also in taking things forward.
Thank you, Catherine. Yes, certainly retrofitting London's housing stock to make it zero carbon, zero energy is a gargantuan task. Jamie, Dimitri, who wants to pick this one up next? Jamie, you okay to do so?
Yeah, absolutely. So to zoom in on one of the areas that Catherine touched on, which is sort of dear to my heart, which is transport. From Uber's perspective, a green recovery would be transport that is more active, more shared, and more electric. So in London, I think if I focus in on the electric part, we're lucky enough that actually with the CCZ and ULEZ, TfL's already put in place quite a strong policy foundation to incentivize drivers to move to zero emission vehicles, with a view to try and reduce congestion and emissions. Now, in response to that, in 2019, we launched our Clean Air Plan, and we made a commitment. So this is 2 years before COVID, but it shows how long some of these time horizons are. And we committed that all 45,000 vehicles on the Uber app in London would be fully electric by 2025. And since then, we've raised more than £100 million to support drivers switching into an electric vehicle, and more than 1.5 million trips have been taken on Uber in London in electric vehicles. So we're making progress. And in addition, what we've done this year is to try and support drivers in that transition, we've announced industry partnerships with Nissan to help drivers move to more affordable vehicles. and with BP to provide drivers with new dedicated charging points in London. And the benefit of all this effort over the last 2 years has meant that actually we're getting to the stage now and where we can launch an Uber Green product in London in 2021, where there'll be a sufficient number of electric vehicles on the Uber app in London, such that actually riders can request a zero emission vehicle in London and a number of other European cities, and therefore sort of drive the choice and drive the demand and drive the transition for a cleaner, more electric transport system.
Okay. Something that's very, very dear to my own heart in the day job. Dimitri, rather than answer the same question that Catherine and Jamie that I posed to them, I know Catherine has to go. I want to pick up the issue of financing and how we finance the transition to a green economy and a fair and inclusive economy. And Dimitri, if you wanted to just refer to some of the work we've done at the LSDC on the London Future Finance Facility, that would be great. I'm also seeing some questions in the chat. People are saying there are trade-offs. We can't afford to pay for dealing with every single challenge that society is facing right now. Equally, some economists, you may be one of them, Dimitri, say actually there aren't trade-offs. It's about reorientating towards sustainable finance, which will inherently bring with it an increase in the common weal. Anyway, so how do we pay for all of this, and what do you think the trade-offs are, Dimitri?
Thanks, Ashok. Well, it's going to require some public sector investment for sure. This is a very good time for it. The IMF, I emphasize this, not just some of the work that we have done where we've been talking about this, but the IMF in its latest fiscal report says that for most rich countries, investing in some of the sectors that we've talked about in terms of things like clean R&D spending, infrastructure, clean energy infrastructure, buildings upgrades, and the rest, mean that every dollar that the government borrows in rich economies such as the UK generates close to $3 in extra output. They call that a multiplier. They come up with a multiplier of 2.7, which means that it more than pays for itself. And we would be absolutely foolish if we were not increasing public sector debt to GDP right now in order to generate investment in those assets that will bring returns that allow you to bring debt to GDP down by inflating the denominator in that ratio, GDP. And that's the only way public sector debt to GDP has ever sustainably been brought down. We realized the mistake of trying to fixate on the numerator, debt, by pushing austerity too soon. That's what we did following the financial crash of 2008, the result of which is we have productivity growth across the rich world has languished. And we'd have to focus on monetary policy because real interest rates have fallen close to zero because there's more saving than there is absorbed by investment. And that's caused all sorts of headaches for monetary policy, which I will not bore this audience with. So there's going to have to be some direct public investment in some of those areas I just mentioned. But you will also, this is about more than investment. It's about the policies, setting the incentives and the signals, things like pricing, standards, regulations, and supporting R&D and deployment. And it's also about the institutional architecture. And this is where things like the London Clean Finance, Future Finance Facility comes in, together with our efforts to bring about a new national investment bank and our efforts to push for increased localism, devolution, pushing on the Local Government Devolution Act of 2016, so that policy can actually help reduce risks in sectors that are hugely policy driven. I mean, we're talking here about buildings, we're talking about transport, we're talking about energy, right? These are very strongly regulated, policy driven sectors. So if the private sector feels that the risks, the policy risks that it doesn't own, and the complexity of these sectors are such that the risks are too high, they won't invest, or they will demand a very high risk premium to invest in those sectors. And that's where the Future Finance Facility and the National Investment Bank can help managing these more complex regions, these more complex projects, and by helping to reduce the risk premium associated with that by taking on policy risks and showing confidence in government policy that it actually has skin in the game in its own policies, and also by taking a more sort of long-term view than the private sector might take in some of these network infrastructure areas. So the idea here is not that the public sector is going to do this, but there are small things the public sector can do through policy, through institutions, and through a little bit of investment that will leverage substantial sums of private investment, because the private sector sees the opportunity here. It wants to move in. It just wants a clear and credible signal from government in order to do so.
Super. I'm conscious that Catherine needs to go. Catherine, can I ask the question in simple terms? Because I'm very proud of myself. I followed what you said, Dimitri, but it was quite complicated. In simple terms, I look at the City of London and think there's an enormous amount of private wealth in the City of London. I look at Westminster and Whitehall and say, I look at it and think our finances, we're really cash strapped as the public sector's cash strapped. So how do we get that enormous amount of wealth that exists in the city and the pension funds elsewhere flowing into retrofitting those 70% of houses in London that need to be retrofitted, flowing into digital infrastructure so that people can work more from home, decarbonising transport? How do we get it moving?
Well, I think the very good news is that there's a huge investor demand for investing in green projects and for financing transition. An investor demand which is driven by two things. First of all, the increasing expectations, particularly from younger investors, that they should see ESG, environmental, social and good governance returns from their money. They want to invest with purpose. And I think that's a really positive development that is absolutely shooting up the agenda. But I think also a recognition that actually some of these risks are risks which the private sector needs to invest in to meet in order for long-term gain. As I think Dimitri has said, some of these challenges and some of these questions of resilience are really critical to long-term sustainability of business. So there is a huge demand to invest in this area, which I think with the right incentives from public involvement too, we can start to see unlocked. Actually, in our own,
what those incentives would be?
Sorry,
could I ask what those incentives would be? The incentives, because I understand the demand is there, but it's not flowing. So what's the block and what are the incentives that are needed?
Some of it is, I think, actually, Ashok.
Okay.
If you look at the increasing amounts of funds which are flowing into projects which have got an ESG element, and actually over this last period, they have made more. People have been making more through those investments than they have, in some of the others. So I think there is a big incentive there. But it's absolutely true. We need to keep focused on the need, the imperative here, and we need to look at standard setting. We need to look at what requirements people should have when they're making a loan. What should they expect the company they've invested in or lent to do, so that we avoid just putting something into something which has got a nice green label on it. We need to be absolutely sure that we are putting money where it matters and avoiding greenwashing. And actually, that's another area where I think the huge assets of the City of London can help, because we have a sort of expertise around regulation. I think we can be a useful voice in helping to set standards in this space. Indeed, City Corporation has been involved in looking at some green standards for investment in infrastructure projects. My connection is unstable, apart from the fact I'm going to be leaving in a second. I just want to make two final points very quickly, if I could just take the opportunity. And the first is that you talked about trade-offs, and yes, there will be big trade-offs. One of those, one trade-off, I would say, is that one of the reasons London thrives as a global financial centre is its global connectivity. And I'm afraid that doesn't just mean this, it also means the ability to travel. So we're not going to see an end to air travel, but we need, so that I think is going to be an issue where we need to look at how that can be more sustainable, while retaining the business travel, the tourist travel and so on, that parts of our economy really depend on. So that's one point I wanted to make. But then finally, I wanted to say we have a huge asset here in London which I think is underused. It was used for centuries and it's gone into disuse, and that is our river, the Thames. And I think the Thames will be a fantastic resource if we use it better for for moving goods around the place, as well as for passenger transport, and a great way to use distribution centres and bring things in which we can distribute through last mile deliveries or whatever. And I'm talking to a number of people about this. It would be great to see much more done about reusing that fantastic resource. So I'm really sorry at that point to press the eject button and shoot off to my next event, but thank you very much, everybody.
So sorry to lose you, but thank you for joining us this morning, Catherine.
Thanks very much, everyone.
Bye, Catherine. Okay, let's Jamie. I'm going to go to you again because there are a couple of questions in the chat, which in the Q&A, which I think are very pertinent to your area of work. But in answering, could you also just, like Catherine did, just give us your take on what some of the trade-offs are, what some of the obstacles to achieving this green economy, circular, decarbonized? Where will we have to concede some ground or do things differently, go outside of our comfort zone sometimes? And so there's a couple of things in the Q&A. I'm going to paraphrase one of the questions. The 15-minute city. We've heard Hidalgo in Paris talk about the 15-minute city, bringing destinations and origins closer together. And of course, that transport plays an important role in this. So how do we, is the 15-minute city a good idea? Does it help us get towards a greener economy? And also, there's a question that's directed you and Uber. It says, isn't there evidence that Uber has been responsible for a significant proportion of the growth in traffic in London? And if so, how does that square with your climate optimism? I hear your point about electric vehicles, but at the same time, vehicles are vehicles, and there are all sorts of other problems that come with having too many vehicles in London streets. So what do you think, Jamie?
Yeah, okay, so there's sort of three questions there. One is around the challenges, and I'll build on Dimitri's point on the investment required to help transportation go green. The second one is around the 15-minute city, and the third one is around Uber's role in congestion and emissions. So if I deal with the first one, I mean, from our perspective, the big area where we see a great need for investment to support sustainable infrastructure, transport infrastructure, is in the area of EV charging, electric vehicle charging. So what we're seeing is that actually, the vehicles are getting cheaper by around 5 to 10% a year. We're also seeing that larger and larger batteries are coming online, which means that now drivers can do a full day's work on a single charge. But the reason why drivers are telling us that they're not yet upgrading to EVs is because of EV charging infrastructure. Now, there's three parts to that. So one part is there just aren't enough chargers. So in Netherlands, there's 20 EV chargers for every 100 kilometers of road. In the UK, there's 3. The second one is the chargers, from a London perspective, are in the wrong places. So, when we look at where the chargers are in London, there's roughly 5 to 6 times more chargers in Westminster than there are in places like Newham or Redbridge or Tower Hamlets. And yet those are the areas where professional drivers live. And professional drivers are, we believe, going to be the mass early adopters for electric vehicles, because the economics of an electric vehicle are you pay slightly more upfront, but you get lower running cost. So if actually it makes sense first for professional drivers who drive more per day. And then the third issue that we see with electric charging infrastructure is they're the wrong types of chargers. So actually the best type of chargers for both the grid and the driver and the car is overnight charging. And yet in many of the areas of London, people don't have access to on off-street parking. And so they're reliant on sort of public parking and public chargers, and there just aren't enough of them. So this is one of the reasons why, we're stepping into this space to try and committing to invest £5 million in electric charging infrastructure in London by 2023. But that's a tiny drop in the ocean compared to what is required. And I think when we look at the kind of policy action, which Catherine was talking about, and which Dimitri were talking about, I think that's how we unlock the real value. And if we look at, say, let's take City of Amsterdam, which has got 7 times more chargers per kilometre of road than we do in the UK. What have they done there? And it builds on many of the things that Dimitri was saying. Firstly, they've got a very big bold commitment. So they've said every individual living in Amsterdam has a right to plug. So effectively, the city and the government will build infrastructure within a predefined period of time near your home when you request it. Secondly, they're setting strategy for infrastructure at the citywide level. So they develop a citywide plan and they implement the plan there, as opposed to a very sort of devolved plan that's happening borough by borough, or with individual councils making individual decisions. And thirdly, they have much better and much more open data sharing. So you can go onto the City of Amsterdam website and you can get enormous amounts of data of how many EVs there are, where they are, how many chargers they are, what the utilization is, what the pricing is. And that creates an environment where the private sector can lean in at both the retail and the wholesale level and say, actually, look, there's reliable investment and there's reliable revenues we can get. We can fund it. And I think the same would be true in London.
So, Jamie, that's really useful, but I think we might be going a little too deep into the detail at that point. It makes a lot of sense what you're saying, but can I just bring it up a second to what you said about policy?
Yeah,
the policy drivers. So the Weird London Cycling Campaign, we produced a report earlier this year to form the basis of our election campaign next year. It's called Climate Safe Streets, and it is essentially positing the idea that we can decarbonise London's roads by 2030. Mass expansion of the cycling network, better zero car and more plentiful public transport, smart road user charging, and the provision of smart mobility solutions and as an alternative to private motor vehicle. So we're imagining a city in which most people, most of the time, come 2030, will not need to have a private motor car. In fact, 50% of Londoners don't have access to a motor car. Is that the kind of policy goal that we could and should be setting for our city? I would say yes. You may disagree. If so, do we have the gumption to try and put in place the policy tools necessary to get to that destination? And can we bring the public with us? And Jamie, Dimitri, either of you on that point.
So I completely agree that the goal should be no private car ownership. I think private cars are not the best way of helping cities get around. It's crazy that the second most expensive asset sits empty for 95% of the time, taking up space in London. So we completely share your view of shared electric and more active transportation. And the thing that we're doing is, therefore, there's both a mode question, which is how do we enable riders and passengers to make better choices? So we've launched Uber Boat, trying to take advantage of the river, which Catherine mentioned. We've got jump bikes to try and give people more active options. We've also got pool and access to public transit. Giving passengers that choice, I think, is a good thing. But at the same time, we need to make sure that the polluting parts of the transportation infrastructure are electrified. So it's a both rather than neither.
Of course. Dimitri, can I ask you a question now? Let's move away from transport. I know it's such a totemic issue, transportation. It's something that we all use transport. It's there. We see it in the streets. Maybe we'll come back to it. Before actually I go to you, Dimitri, I am aware that there are a lot of questions in the Q&A, and I'm sorry to those of you whose question I'm not able to pose. There are just too many, but I'll try and gather them together into general themes and pose them. Dimitri, can I look at the social side of things? London has some of England's most impoverished communities. We have wealth disparities that are enormous, greater than almost anywhere else in England. We could achieve a green recovery and still have impoverishment and disadvantage and a lack in the sum total of social justice. What do we have to do to make sure that we achieve a green recovery that is genuinely for all Londoners and reduce some of that unfairness and inequality?
Yeah, okay. I mean, at some point, I'd love to come back to the transport question in the 15 minutes.
Oh, please do.
Some of the risks. Well, why don't I wrap it into this question as well, actually? in a way that I think frames the answer in terms of sustainability, inclusivity, and resilience in general, because there are some real risks to the compact connected city as a result of our response to the. Many of the responses, the behavior responses, have been very favorable for sustainability, but some associated with the kind of need for greater sort of spatial separation, which is the enemy of agglomeration. And agglomeration is both the friend of innovation and wealth, but it's also the friend of sustainability. And agglomeration is when people live in compact connected cities and do things more efficiently and more innovatively. And the risk, well, I mean, I'm starting to answer it now, aren't I? I mean, the risk there is kind of pretty obvious, and we're seeing it already. You know, there is a risk that people are moving increasingly from public transport to cars, seeking to live more in the suburbs with more green space. And if this trend continues, you run the risk of greater urban sprawl and the hollowing out of our cities. Which is something we don't want, and I think there's a sting in the tail here, where, you know, as a result of this, and we're seeing this already, of course, people tend to use public transport less, public transport revenues fall. The wrong policy response to that is to say, well, if revenues are full, we need to postpone modernization, postpone investment in capacity, because of course all that does is it makes public transport even less reliable and attractive, so even fewer people use it, and you can very quickly get a death spiral of public transport. We've seen that already, for example, in the shelving Crossrail 2 and other plans for London's public transport infrastructure. It's very, very dangerous if we start undoing the benefits of a compact connected city, because therein lies the greatest hope of not only building interactive, livable cities that appeal to people of high wage and high skills, but also suburbs are just less efficient in terms of their resource and energy use. And we really don't want to start moving towards the American model of urbanization, which is substantially less efficient and substantially less compatible with sustainability. Now, on your point on equality, I mean, it's really, I mean, the way forward here to build on the investment we need for the 21st century for a city like London is to think about what is London going to need to be competitive in the 21st century in an environment that's going to be resource constrained and carbon constrained. And now obviously that means investing in the right kind of infrastructure and not spending public and private money propping up things like fossil fuel intensive infrastructure that we're going to be locked into for decades and have to retrofit. It means investing in human capital. This is important. It means providing the skills and jobs necessary for the 21st century, retooling and reskilling workers, not just for the low carbon economy, but for this sort of gamut of technologies that are coming our way, from things like AI and the Internet of Things and big data and digitization, all the rest of it, which really threaten to change radically the way that we work and live. And if workers aren't prepared for that and they can't participate and benefit from that change, that's going to increase inequality, because it's the most vulnerable who tend to suffer. Natural capital is a classic example. We've seen during this pandemic a division between those with gardens and access to green space, and the benefits that has not only to their physical health, but also to their mental health, versus those who tend to be crowded in communities far from green space, who have suffered much more from the pandemic. And an investment in natural capital has so many benefits in terms of not just health, but also retaining water, absorbing pollution, cooling down the heat island effect, and so on, that we're really valuing and investing in it much more. And then finally, your point about tackling inequalities. It's not just inequalities in income. It's not even just inequalities in wealth. It's inequalities in access to public goods and services. Things such as health, things such as housing, things such as transport, education, and justice, which are not equally distributed. And again, I think, you know, if the pandemic results in a division of responses whereby the wealthy can actually move homes to areas that are greener, that are well connected, leaving the rest of us to sort of struggle in a hollowed out city with poor infrastructure, poor connections, and a lack of investment in green space, that's only going to do damage to the livability and prosperity of a city like London. And we really need to think carefully about how we avoid that.
That's a really important point. And can I just push you on to that a bit more? And Jamie, please do come in as well. Let's make it real. Near where I live, there's a housing estate where there are kids on that housing estate who probably, I know some of them, they don't have the kit at home to be able to learn very well at home. They've suffered quite a lot during this this COVID-19 crisis. They don't even have a quiet space to work. You've got kids at university now who are struggling. It just feels to me right now, in this period of time, there's a generation of youngsters who are already disadvantaged, who have become potentially even more disadvantaged because of the rigors of lockdown and what's happening in our education system. Yet we need, as you were saying, to talk about, we need to have people getting access to the jobs of the future, the skills of the future in the green economy, the circular economy. How do we crack it so that those kids who are right at the brunt of it now don't become a lost generation and become the people who are driving forward a greener and fairer economy and society? And also just in terms of the innovation, we want an innovative city. We can't afford to only be allowing innovation to be cultivated in some sectors of our society and losing all that potential for innovation in other sectors of our society because they don't have the support networks and the other wherewithal that is necessary to give them a chance to be innovative and creative. And we're at the crux of something. How do we make sure we exit it effectively?
Can I go on the
Please, Jan. Yeah.
So I think Dimitri's absolutely right that, you know, one of the great aspects of London and all big cities is the agglomeration effect means that, you know, individuals come together, connect with each other in sometimes planned, sometimes random ways. And out of that comes innovation and new thinking and the combination of ideas. And that I think is what has made London great and what we have to make sure we keep as we sort of look into the future. And so a suburban sprawl would be a really bad answer because I think you'd have fewer connections and our sort of London's collective brain would therefore shrink. I think though that the interesting question for me is then you overlay the way that London's transport infrastructure has sort of built since Victorian times, and it's very hub and spoke. So you've got a model where, you know, people come in for, or historically have come in for fixed periods of time into the center of the city, sat at desks, sometimes interacting with their peers, sometimes not, and then being pulled out again at the end of the day. And I think, you know, I think it is possible to make, but I think we do need to be cautious to make things more local while still keeping the power of sort of connectivity and the innovation that comes from that connectivity, and to make sure that all communities are able to connect. Now, you know, but I do think that London's transport system, which has traditionally been very hub and spoke, will need to work out how it adapts to that change to facilitate it. And, you know, in times of change, flexibility and optionality are worth a lot. And none of us really knows how COVID is going to make the city work in the future and how people are going to get around. But it does seem that actually, therefore, you know, what I think Uber, the role that we can play in that is to try and give individuals a range of options as to how they get around, you know, bikes and walking for short trips, public transport, Uber boat to use the river, and then to let the signals of what they're choosing allow us to sort of redesign mass transport to make sure that it's working for the city. But, you know, it does require a lot of thought and quite a lot of flexibility.
Oh, okay, so back to transport. Go ahead. Dimitri, please.
Yeah, I think that's absolutely right. I mean, you raised the issue of optionality here, and I think that is right. Of course, some big infrastructure investments require taking a punt about the future, and they do mean you lock into them. And it may be that by the time it's built, the infrastructure is redundant. It's entirely possible that Crossrail 2, if it's ever built, is built at a time when everybody's using autonomous vehicles and therefore perhaps requires it less. I'm relaxed about that. I think, you know, you can't expect every single infrastructural project to hit the mark. If one or two aren't redundant, then you're probably underinvesting. And I think the evidence suggests that when it comes to infrastructure investment, in the UK in particular, perhaps less so in London, we've tended to under rather than overinvest. So I'm not too worried that we're going to overinvest in our transport infrastructure. The risks of being too cautious when it comes to optionality is that you end up with a city like Jakarta, where every public transport project fails its cost-benefit analysis because you haven't considered the network effect. We're lucky in London; we have a very good transport network, so the marginal value of every additional tube line is a lot higher than if you just had one tube line, because you link into this powerful network, and you avoid having the kinds of problems that cities that didn't head and do that, because they didn't think about the network externalities associated with big infrastructure projects. So I think I think Jamie's right. I mean, it's got to be a question of balance and keeping options open. But part of keeping options open is that you have an infrastructure plan that you continue to press on with until such time as it's very clear that it will be redundant. I think we're far from that. Right?
Yeah, I mean, my point wasn't optionality as a hedge. My point was actually the signals of how people are changing their patterns, and the data we can get from that drive future decisions.
Absolutely.
Otherwise, what we're left with is people will be on the corridors that they were on 10 years ago, even though the world has changed.
Very good.
And then we have the question of the governance of that data. Is it the public authorities or is it private companies? So there's all, but I think you're absolutely right. I think we're in agreement that has to be the way forward.
Let's hold on the governance of the data question, because that is an important one, but we won't have time. Can I? There's a question in the Q&A which I think is interesting. It's an obvious one, and one that people, I'm sure everybody watching will be asking themselves. I can't find the question, but I'll pose it myself. Can we have? Is a consumerist? I think the question was. Is a consumerist society consistent with a green recovery? So we are all, I'm sure, very aware that if you look at direct emissions, carbon emissions, London's done reasonably well. We've seen a decline in direct emissions, but we have just offshored a heck of a lot of production of carbon through the goods and the products that we import from other parts of the world. And there's a high carbon content in some of those goods and products. Now, we know the high street's under massive pressure. We've got retailers closing. We've got people in the hospitality industry on their last legs. The pressure to open up. Just watch what happens on Black Friday, potentially. The pressure to get this economy moving again through accelerated and ultimately unsustainable non-green consumption is potentially enormous. And it's a long-term issue. Is the way we consume compatible with a green recovery for London?
The answer is no. I mean, the way we consume now.
Okay.
The way we consume now, no. The way we consume, yes. We're not. We have. To be honest, we haven't really bothered trying to change our ways. We know that, for example, we can get emissions more or less down to net zero within a meaningful time frame, with very little impact on growth and with substantial benefits and opportunities. We just haven't bothered trying. In the sectors we have bothered trying, things like renewable energy and vehicles, we know that we're going to have cheaper, better energy and vehicles, irrespective of whether we give two hoots about the climate, because we've bothered to innovate in technologies which actually end up being lower cost and more productive and efficient. They require investment to get you there, but we're going to have better cars, cheaper electricity. That's brilliant. There are many other sectors where if we make the effort, we can start squaring the circle, both of dematerialization, and this would require investment in the circular economy, in reuse, in reducing waste, and so on, and at the same time improve efficiency and productivity, because waste is, well, how can I put it? It's wasteful. Inefficiency is, well, how can I put it? Inefficient. All these things limit productivity and actually limit growth and therefore prosperity. So yes, I think we can do it. Yes, I think we can have much more sustainable lifestyles without necessarily taking a knock on consumption, by changing the way we do things, changing the way we produce, increasing the weightless economy and dematerialization, and focusing on services which don't have quite such a high resource call. We don't need 5 cars and 6 watches, but we might want to spend more time with family and going to the theatre and enjoying some services which are much more efficient in their use of resources. So, I think it's too soon to say we can't do this until we actually made a kind of conscious and purposeful effort to try and do that. If that doesn't work, then fine, let's consider degrowth and reduction in consumption. But at least in the interim, let's try and change the way we manage our economy to make it more sustainable.
I would agree. I mean,
David, do you have a
the two things I would draw out is firstly the shared economy and the efficiencies if actually we're sharing certain common assets better and using them better. So again, the obvious example that I think we all agree on is the private car sits empty for 95% of the time. That is just a waste of material and resources and energy. I think the second thing I'd say is I think it's still important that choice, whilst we could be skeptical of consumerism with all of the sort of waste that it implies, I think choice is still going to be an important driver of that better world. So I think it needs to be an informed choice where we are making available to people all the information about how the decisions that they take pollute or cause other members of the community in which they live some kind of collective pain. And I think that side of it, in other words, the way we use data to allow people to choose things that are informed choices, not just informed by what they individually want, but actually the impact on the broader collective, I think is important and something that I don't think we do very well now. So if I take the example, sorry to go back to transport again, the data on transport and the emissions for different ways of getting from the suburbs into London is really poor. I don't know that people really understand the difference in emissions and congestion impact for all of those different choices that they're making. And I think we would be better if we made it more transparent. We had better ways of allowing people to factor that into their decisions.
I 100% agree with that. And I do hear the points you're making in relation to informed choice, but we are in an emergency and we need to go much faster and slash carbon emissions more deeply than ever before. So what about things like a carbon border tax? Would we be prepared as a country to put a price, a premium on goods that are coming into this country that have a high embedded carbon content? And would the population put up with it? And would this actually be a driver towards more innovation and a stimulus to reward the companies that are looking at their value chains and are trying to dematerialize and decarbonize their value chains? Maybe this is a question for an economist, Dimitri. As well as information and as well as incentives, do we need a bigger stick?
Yeah, why not? So look, but you need the stick to be matched by the carrots, right? So if you set up a policy framework with the right institutions of the kind we've spoken about already, the right policies, so effective carbon pricing, the UK doesn't do too bad on that. Standards and regulations, support for R&D and deployment. If at that point you then feel that you're making the effort and the playing field, the competitive playing field is not level. And actually, you've got to bear in mind that by doing this, you're going to make a heck of a lot of sectors much more competitive in the 21st century because it's a kind of a one-way bet. The world will become lower carbon and more resource constrained. So the faster you can build your economy to steer a comparative advantage in those sectors, the better you'll do. But yeah, there are carbon intensive sectors that you don't want to offshore. And a border tax adjustment is one way to perhaps address that. Now, it's a very fiddly thing to do because you have to look at the carbon content of every good at the border. We're building quite complex systems on our borders right now. So maybe the addition of a border tax adjustment won't be that onerous in terms of administration. But it's something that needs careful thinking. There are ways around doing it. I won't bore you by talking about them now. But actually, what's important in terms of the stick might be just the mere threat of a border tax adjustment. So you could say to a country, look, we don't think you're pulling your weight in reducing emissions. We're going to give you 5 years to get your house in order, and then we will consider the imposition of a border tax adjustment. And if the EU, America, the UK, and the big economies all act together to do that, that's going to be a powerful motivator for some of the major exporters. I won't name names, but we know who they might be. And we've seen in the past that countries like China have actually anticipated those kinds of moves by taxing their exports on the basis of carbon. They used to tax their steel exports. They applied a carbon price in order to try and make Chinese steel more carbon efficient. Now, that tells you something. The Chinese see advantage in making their sectors more competitive in the kinds of areas that will drive growth in the future. And that means them being more resource efficient and lower carbon. So I think the mix of carrot and sticks is something that could work quite well in the context of countries understanding the opportunities from the low carbon economy, as well as the threat to their high carbon sectors.
Okay, I wasn't aware of that. The action that the Chinese were taking in relation to that. That's really very interesting, and perhaps it should be more. This should be more widely known. Thank you for telling us. We only have a couple of minutes left, so I'm going to ask a very broad brush question. Imagine you are standing in next year's mayoral election, and imagine you get elected. What would you seek to do over your 4-year term of office to use the situation that we're in now, the pandemic, to construct a pathway towards a green economy, a green and just economy for London? Who wants to take that one first?
I'll have a crack.
Go on, Dimitri.
Well, I was just going to say expectations. I mean, it's all about credibility. You need to have a clear vision of where you want to go that's convincing and compelling enough to steer investors. And that means doing everything you can with the limited policy levers that a mayor has, but also lobbying and advocating very clearly and working with businesses to talk about what are the policy frameworks and institutions necessary to drive that kind of investment. And if that's clear and it's coherent, I think that could make a very, very big difference, in contrast to sending mixed and muddled signals, or being too cautious, or not wondering whether there'll be growth effects in this sector and that sector, and a much more kind of disaggregated and dispersed approach to this story. It can't be about a community heating scheme there and a green roof here. It's got to be about a vision of a green, competitive London that steals the march on other metropolitan centres across the world in driving a livable, sustainable, inclusive and resilient economy for Londoners. And I think if you do that, the rest will fall into place.
Wonderful. Jamie?
So I would sort of be campaigning on a continued push to more active transport zone. I think the mayor's made a great set of initial steps there. I think there's further we could go. The other thing I would be doing is really urging to double down on EV charging infrastructure. So I think looking to places like Netherlands and the right to charge as really integral ways of setting the policy framework that encourages private sectors to invest.
Fantastic. In a nutshell. Well, that's 11:30 on the dot. And I think that is the time when we have to bring proceedings to a close. So I'd just like to thank Jamie and Dimitri for your terrific insights, and also in absentia, Catherine as well. It's been a fascinating conversation. These are really thorny and difficult questions, but certainly from where I'm sitting, we have no choice but to use this, the terrible circumstances in which we find ourselves, as a platform for a green recovery, because there will be no second chances when it comes to the climate and ecological emergencies. So thank you for your contributions this morning. You'd both have my vote if you decided to stand for election in next year's mayoral elections. There is still time. I'm sure Centre for London would have your £10,000. Well, why couldn't it be a job share? But thank you again. And thank you to the audience for your participation, for your questions. I'm terribly sorry I couldn't get all the questions in. I did try to composite them, and to use the old trade unionist language, as best I can. I'm sure we'll have more opportunities to discuss the points you make in the future. And back to you, Kate.
Thank you so much, all of you. And thank you, everybody watching and listening, for being here this morning. Thanks also to our sponsors of London Conference 2020, the Corporation of the City of London, L&Q, Uber, supporting sponsors London Councils, the London Legacy Development Corporation, London Property Alliance, the Greater London Authority, Primera and Trust for London, and exhibiting sponsors Commonplace and Port of London Authority. As we may have mentioned, climate change and how London recovers from coronavirus are both major themes in our big London Futures project. You can find out more about that at centreforlondon.org. And we'll be starting up a networking session so people can continue the discussion, maybe talk about some of those questions that we haven't had the chance to fully explore. That'll start right after I'm done speaking. And the link and password is in the joining email that you have this morning. So we'll see you there. And the next session today is also on economic recovery, looking at how new working patterns and travel patterns are going to affect local economies all across the city. And that features Paul Scully, who's the Minister for London, Claire Coghill from Waltham Forest, who's also the Executive Member for Skills and Employment at London Councils, Vidya Alexson from Power to Change, Paul Williams from Derwent, and it will be chaired by our own Research Director, Claire Harding. So that starts at 2 p.m. sharp, and we're looking forward to it. Thanks so much, everybody. We'll see you.